They asked me this question, and I've been seeing it from a lot of other investors. They're thinking right now is a good time to sit on the sidelines and wait to see what the market is going to do. What are your thoughts on that?
I think it depends on your position and where you're at and what you need to do. Because I mean, even for us, we've kind of taken a little bit of a side. It's not. I wouldn't say we're sidelining anything, but we're just not going as like hard and heavy of just doing a bunch of experimental marketing and stuff like that. But I know people on all sides. I know people that are going balls to the wall. They're just like, oh man, I'm not letting this do this. I'm going to keep going hard and just keep going far. Or like, I'm going strong just like I was before.
Yeah.
But I know people that have completely pulled out, and I know everybody in between. So it really, I think it depends on your personal situation and your beliefs and what it is that you want to do for your goals. So for us, we've kind of not sidelined, but we aren't going as hard as we were 6 months ago. It's kind of like, we're just going to tighten up and take the tried and true marketing stuff, preserve cash, preserve dry powder, and focus on the stuff that we do have and working on some internal systems.
So what I've been telling them is more along the lines of, look, the market is choppy right now. And it brings me back to conversations we've had with investors back in 2017, back in 2020, when they're like, oh, this market is going to tank, something crazy is going to happen, I'm going to sit on the sidelines. And then what ends up happening is opportunities pass you by. I'm not saying you should be investing right now, but you shouldn't be on the sidelines either.
You should still be watching for sure, just to see like, hey, what is happening? Because I mean, I looked at a wholesale deal yesterday, and I'm like, nope, still too many crappy. And I got it from like 2 different people. And this guy called me, goes, hey, I got this deal that meets your criteria. Like, I'll send it over. And he sent it to me, and he's like, oh, it only needs 40 grand at work, 180. It's $20,000 less than the list price, and it's worth 295. And I just kind of looked at him like, Converse for 300 for like a 1,500 square foot house. I'm like, I'm just curious. Like right off my head, I'm like, red light. Nope, sorry. But I looked at it and like, the Zillow estimate was like 240.
Yeah.
I was like, Zillow is, and it's like a 1987 build. It's like Zillow is not that far off a 1987 build. It's like, dude, I mean, maybe you might get 250 out of it. Zillow's off a little bit like that.
Yeah.
But it's like, it's not off by 20%. And he's like, yeah, but you're getting it for 180. I was like, yeah, plus 40 grand in rehab. That puts you at 220. I list it for 240, say 250. It's $30,000, $15,000 in closing costs. And then I have my holding costs. It's like, there's no meat left on that bone worth that risk of 40 grand.
Right.
It's like, I might take that thing on if it's like, I buy it, I only got to do some paint and carpet and then do that. You're talking 5-10 grand. He's like, but not a $40,000 rehab. I mean, that's way too much renovation for something like that. And it's like, there's just no comps there.
Yeah. And I mean, we've seen it in a property that we recently bought. You look at the sold comps for the last 2 to 3 months, and they were in the low 300s. But then you're looking at the actives right now, and they're in the high 280s. So it's like, yeah, the comps show low 300s, but what's active right now, what's on the market right now, is much lower than that. So as an investor, you got to look at, and that's something that we've been doing. One of the shifts that we made is the way we run our comparables. We're not just looking at solds anymore. We're looking at what's on the market right now competing. Because what's active, we're seeing properties that are active and they're sitting longer. They're doing price drops. And those are the ones you're going to be competing with. So while before you always ran comps and you're like, okay, what are all the solds? Right now we're looking at the solds kind of like, okay, yeah, those are sold. But that was a month ago. And this property is just as good as that one, and it's being listed for 10, 15 grand less. So as an investor, you got to take that into account because it's like, by the time I sell, is it going to be another 10, 15 grand less?
Yeah.
Right? So, but going back to the main topic was with people trying to sit on the sidelines, I don't think it's ever a good idea. I think you need to be attending any meetups that are local to your area, be involved in whatever, even getting deals, even if you're not going to buy them, but go looking at them. Mm-hmm. Keep your eye on the market, see when the market is shifting, because what ends up happening, and in my opinion, what ends up happening is that you will, by the time you realize what the market ended up doing, you're late, right? Because it's like, I'm going to wait to see what the market's going to do. Well, if you step out, by the time you realize what the market is doing, you're already too late in the market. Now you're trying to catch up with everybody else that's in the market. So then you hear the same complaints. It's like, I can't get good deals. I can't find. It's like, yeah, you've been out of the market too long. You weren't able to ride the wave to understand what were the shifts in the market.
Yeah.
So yeah, I mean, it's I don't know. As far as that goes, our opinion, it seems to be that you agree, is it's not the right time. It's never the right time to be sitting on the market. To be sitting on the sidelines.